Brazil, where there were consistently banks, and it's a very concentrated industry, and it just didn't really have a lot of competition. It showed a lot of profitability all around, and so that sparked my interest significantly. I went back to do an MBA. Then I went back to Brazil with another firm named Sequoia Capital, this time looking much more at technology in Latin America. And technology really ended up being sort of the enabler of a lot of these business models that we were studying. So by the end of 2012, I'm in Brazil. I have to go and open a bank account in Sao Paulo, in the center of Faria Lima for all the Brazilians. And I feel firsthand the pains of the Latin American or Brazilian banking consumer as I try to enter this banking branch that really is almost like a prison. And that's always the way I describe it, is like the experience is like if you go into prison, or a little bit better than that, you're going through a security line of an airport in the US, right?
Or the DMV, right?
Exactly. But I have Colombian passport, and I've had to go through that security line in the US. And when I show my passport, there's a specific way, there's the random screening. I felt that very, very clearly. Maybe that's why I was attuned to that experience. But I had to go through this bulletproof door, and I had to see these armed guards looking at me like a criminal. And I had to leave the branch and put my laptop in a locker outside, and then go back in and wait 60 minutes and talk to a branch manager that clearly told me he had no interest in really helping at all, that he was making me a favor and not the other way around, not me being the consumer and the banking manager really fighting hard to get my business. And there was an entire process of about 5 months where I had to fight for about 25 hours to finally get a simple bank account and a credit card. And I remember the amount of anxiety and just frustration that I had in that moment. And I could not understand how it was possible that a consumer was getting that type of treatment. And on the other end, these were the most profitable companies in Latin America and some of the most profitable banks in the world. And so something just didn't really fit. How wasn't anybody competing with these guys, with these banks, for that profit, offering better services to those consumers? And the part that was missing ultimately that kind of really enabled that opportunity, because that opportunity existed in the 90s, in 2000, was technology. In 2005, you could have gone and competed with the big banks in Brazil. And a lot of people tried. Citi tried, HSBC tried. They couldn't. You needed a lot of branches in every corner. You needed a lot of distribution. You needed a lot of investments. But the advent of social media and technology and smartphone penetration enabled that window of opportunity in 2012, 2013 to build what at that point we concluded was going to be the future of financial services, which were digital companies, digitally native technology companies offering financial services. And so the rest is a bit of history. I got very excited about the idea. I spent about 3 months going around in Sao Paulo, went back to Colombia, and also talked to everybody I could talk to. Everybody in Brazil and Colombia said, forget it. It's never going to happen. You cannot go compete with those big banks. In Brazil, it was very much like, you're Colombian, you don't understand Brazil. They're going to kill you. They're going to kidnap you. The regulators won't let you. But the more people said no, the more I gained conviction that it was an opportunity, because the arguments that people used to sustain that it was not doable were actually very weak arguments. When you thought deeply about one by one of the arguments that people were naming, they were easily rebuttable. There were these hypotheses that nobody had really tried, like the regulators won't let you. And then I would go to a regulator and said, do it. We would love more competition. It's really bad for Brazil to have 5 banks that own 90% of all the assets. Or another arguments, Itaú tried to do an online bank in 1999 and it failed. Well, 1999, there was 5% penetration and there was dial-up internet. So it was amazing to see a lot of strong conventional wisdom on one end, sustained on very weak arguments by supposedly the experts from the industry. And after thinking deeply through all of that, ultimately I got, gained a lot of conviction that this was a great opportunity, precisely because everybody thought it was not doable, but in fact, some of the changes in technology enabled that opportunity.
Great. So it sounds like you're a bit of a rebel. So the more that people said, no, you can't do it, the more that you wanted to do it, right? And me having lived here, just a sort of my personal view on banking in Latin America, having lived in Mexico for 5.5 years. And I think if you talk to anybody who's tried to do banking here, it's the same. It's the same story. I can count on one hand the number of times I've been into a bank branch because the experience is terrible and they are zero motivated to help you. And I've worked with some of the big banks here too. And with all respect to them, they realize that it's time to change. So this is very exciting. What has been your philosophy and your approach to the incumbent? So first talking to them and seeing, you know, what's the reason that you haven't changed, that you haven't evolved, and then competing with them. And then this week, you announced actually a collaboration with Chubb, which is an incumbent in the insurance industry. So tell us about your journey of also, you know, your philosophy and approach with the incumbents, with the traditional financial services players in the region.
Sure. Yeah, we have in our headquarters, in a big room that we have a couple of quotes that we are very inspired by. And there is this quote that we've seen that we like since the very beginning. It's attributed to Gandhi, but it's still unclear exactly who said it. But I think it summarizes very well the evolution of the incumbents and the evolution of how our relationship towards them has happened. The quote is, first they ignore you, then they laugh at you, then they fight you, then you win. And all the incumbents have gone through those phases in different stages and in different velocity, but we've seen that very clearly. Initially, it's completely ignore, right? Like I remember the first 2 years, 3 years at Nubank in Brazil is, who are those people? They didn't know. These are such a large company. Somebody mentioned to me yesterday that if you add up the G&A cost of Bradesco and Itaú, they represent 0.7% of Brazilian GDP. That's the size of the companies we're talking about. And when you are in those skyscrapers and you are in the top floor and the world is your oyster and you own this market for 4 decades, you're alone. Nobody's going to touch you. You're invulnerable. And so for the first few years, we were completely ignored, and being ignored is a bliss. You want to be ignored. If you are trying to disrupt an incumbent, don't go to the media, don't go to the press, don't talk to anybody, be quiet and work. Get your head down and don't tell anybody what you're doing, just run as fast as you can. And that's what we did. We were in a little house in Sao Paulo and we just worked nonstop for 3 years, building our entire tech stack, talking to anybody, launching our products, trying to talk to consumers, and we try to be ignored for as long as possible. Then when they start hearing you, then they start laughing at you. And then we pass that phase, and the incumbents, I remember a lot of the incumbents talking, they're never going to make money. It's impossible to make money with no fees. They're going to have huge credit losses. We have 4 decades of data. They have no data. They cannot underwrite. Customers are never going to trust a new brand. They're never going to trust their life savings or deposits in a bank without branches. So again, all these arguments where they just laughed at us, and we thought it was great because again, not only being ignored, but being underestimated for a startup is great. You want to be underestimated. You don't want to be overestimated. Being underestimated is great. And so that was maybe another 2-3 years where we started just being underestimated. They didn't really care. And then at some point you start showing up in their KPIs and they start realizing they're losing share, and they start realizing customers are leaving and churn is increasing. And some of them, not all, start paying attention. And that happens at different velocity, depending on how prepared the incumbent is. Some of them will see you sooner rather than later. And then they go into the fight mode. And when they go into fight mode, that's when I think they start realizing how hard change is. Change is really, really hard, especially when you're an organization of 130, 140,000 employees. And a successful organization, success can be a a poison, right? Success is a drug. If you are a very successful organization and after 5 decades of competition, you won, you are number one, that success brings a lot of arrogance and you think you have all the answers. And so that is ultimately one of the biggest detractors or one of the biggest enablers of inertia, organizational inertia, for you to be able to move and compete. And so once they realize that they need to be fighting, it's very slow. You go and hire McKinsey and you pay them, $100 million. And after 12 months, they come back with a plan. And then you have to talk to it takes you 2-3 years to respond. And then you might be able to launch like a separate challenger bank or a different app, and it doesn't really go. And so anyway, after 7 years, we're a little bit getting from the third to the fourth, where a lot of the banks have competed. Now everybody has, at least in Brazil, they've thrown competitors. They've thrown hundreds of millions of dollars into competing with us. And even now we bring more customers in 1 month than some of those in 2 or 3 years had been operated. So it doesn't even really get close after them investing other organizational capabilities in dollars. And it comes down ultimately, I think, to culture. You can buy an app, you can buy a better website, but when your customers call you as an institution and you still hear the same language and you still are made wait 30 minutes to get an answer, and you're still trying to understand a very complex financial product that charges 50 different fees, then as a customer, you realize very quickly. Who's real different. And we talked on Nubank a lot, a bit, the Beatles song. Ultimately, you just cannot buy love. These banks they're hated because of the way they've treated their customers for decades. No amount of marketing or better app is going to ultimately buy the loyalty and the love of consumers that have been abused for decades. And that is ultimately the really hard thing to change. You just cannot change overnight, and not amount of money can really buy that. So to your last part of the question on Chubb, there are different incumbents have been able to react differently. I think the ones that have been able to react best are the ones that realize it's a culture change. It's not necessarily a technology change. And now they realize where their strengths lie, and now they see an opportunity to work with fintechs that have some strengths and some weaknesses. And in our partnership with Chubb on insurance that we announced this week is they bring capabilities and expertise in the insurance market that we don't have. We literally just started here, but we now have a large base of customers. We have a lot of analytics. We have a brand that customers love. So there is very good match. And in that situation, there's really great opportunities for cooperation with incumbents.
Awesome. I saw in my previous work at Finovista, where we worked with incumbents and with fintechs, I always thought it was interesting because if you talk to an incumbent, the typical sort of timing that it takes to launch a new product, if they're really, really running fast, would be 9 months. That's really fast in the corporate world, right? Whereas as a startup, I think you would recognize this as well. If you're talking about 9 weeks, you feel like that's too long, right? To get an MVP and start launching a product. So it's exciting, this evolution of the ecosystem that we're seeing as well, that companies like Chubb are working with Nubank. So congrats on that. Digging into a little bit reality versus expectations when you decided to start with Nubank, and thinking about where you are today, again, as one of the biggest players, highest valued startup in the region. When you started, did you think that you would get to this point? Was this always the vision, or what were some of the deviations in the journey?
Definitely not. We definitely even for a second imagined what the journey was going to look like. The strategy we followed hasn't changed really. The kind of the roadmap of beginning with a credit card product, building a customer brand, building a number of different skill sets and capabilities, and then building the entire bank, and then internationalizing. All of that roadmap was very clear since the beginning, and we've just been following that roadmap. That hasn't really changed. But we've been very surprised on the positive side about just the velocity of adoption. Our Series A deck had us getting to 1 million customers in 5 years. And that was ambitious. and we got to 1 million customers in 2 years. It just happened way, way faster than anything we imagined. And I think ultimately we underestimated the level of consumer pain. Consumers were readier than we imagined to adopt services and products like such as ours. So that velocity and that growth has been a great problem to have, but growing is hard, and just trying the amount of focus now on building an organization that can support that growth effectively while maintaining and improving culture has been a pretty significant challenge that I didn't realize it was going to be so hard. I remember before Nubank, when I was at Sequoia, we talked a lot about how the culture of a startup was built in the first 6 months by the first 10 to 15 employees. And so I was very mindful of that at the beginning of Nubank. I had a deck of the story of Nubank and a deck of the culture of Nubank, and both were equally important. One was to raise capital, one was to raise talent, to recruit people. And that served us very well, because defining the culture at the beginning was very, very important. And I think that's ultimately what has helped us maintain that culture as we scale, because you have very, very strong core and a very strong group of people initially that then you're adding to that, and you have a very clear view or visibility of what type of people you want to hire. And that has helped on the fast growth, but that's definitely one of the hardest challenges of sustaining an organization that is growing at that pace.
Talking about culture, it's interesting to me sometimes to look at sort of regional differences, right? So you've worked and lived in the US as well as Latin America, and you just mentioned that at the beginning your plan was to reach 1 million customers in 5 years, and you actually did it in 2 years. So a really specific, practical question: if somebody is starting a startup or working in a startup, founding a startup, for their growth plans, should it be as aggressive as possible? Do you think that, when you see US-based founders versus Latin American founders, do you see a difference in terms of like that big vision and the projections that they want to get to?
I think so. Projections are hard, right? The one thing that we know about projections is that they're all going to be wrong.
Right.
But so I would focus less on the projections, focus more on really finding a large market, because you cannot build a large company in a small market. That cannot happen. So a large market since the very beginning is a must. And then identifying that customer pain in that large market, and having a hypothesis around how your solution is going to address that customer need. It's going to be a hypothesis initially, because you're only really going to know if you're solving that problem once you're live, once you have customers, when you can iterate, and sometimes you'll hit it the first time. A lot of the times you won't, and you're just gonna have to continuously work until you find the right product market fit there. So I would say focus less on the projections, more on that big market and those need. And then just philosophically, our view has been that it has been a bit of try to under promise and over deliver. It is for us, it's great to now, when we race around, to be able to go and show a potential investor, this is the projection we had on the Series A. This is what we did. We beat it. This is what we said in the B, and this is what we did. We beat it. And then the C, and in the D, consistently, you build a track record of under promising and over deliver. That will bring you a lot of trust, even if at the time you're racing around and you're incentivized a bit to be too aggressive on the projection, because that might help you on the valuation side. It will have a cost down the road. So you have to find a balance there, and you have to put a plan that you feel comfortable that you will beat. On the, I think on the level of ambition, I think that has changed now in Latin America. Certainly, when I was at the first time around was at Sequoia, and we were thinking, should we start Sequoia Capital Latin America? And that was a bit of the idea. And we spent 2 years, I spent 2 years flying back and forth and meeting founders, this was 2010, 2011. It was just not exciting for a firm like Sequoia, and meeting a lot of entrepreneurs. They just wanted to go and copycat whatever business model the US had. And and for a firm like Sequoia that backed Bill Gates, Steve Jobs, and Larry Brin, and it was just not interesting. And after 2 years, we said, sorry, Latin America, Sequoia is back to Menlo Park, and we'll stay there. It was very sad. It was a very sad moment for me being Latin American, but I completely supported that view. That has changed now. This second generation, I think, of founders in Latin America are thinking very, very big. I don't think necessarily Latin America today needs to think about how to put a man on Mars. That problem will be solved likely by US or China, at least now. But we should just go back at those level of anxiety and frustration, going back to my story of me being a consumer in bank and feeling that in the pain. If you are a consumer today in Buenos Aires or Medellin or Guadalajara or Rio, and you are mindful and present through a 12-hour journey since you leave your home and you go to work and you go back home, you're going to find 4 or 5 moments of extreme anxiety and pain going into transportation, going into a healthcare system, or going to a hospital. So those are the opportunities that we should be tackling as Latin Americans, and they're big, they're gigantic, because when you look at you look at the biggest companies in Latin America, they're on these traditional sectors, and they all should be able to do a better job, right? If it's financial services or insurance or healthcare or education, there is opportunity really in all of them. So I would say entrepreneurs in Latin America now are appropriately focused in solving those problems. And those are big, big, big problems. And that's very exciting to see.
Absolutely. That's actually what brought me down to Latin America, because I saw this opportunity. I had, prior to moving here, I had worked in corporate America, and I thought, what if there was a way to take that corporate experience and have a more direct impact? And you come down here for any amount of time, and yeah, you see the pains of going to the bank, going to get some sort of medical service, thinking about education. There's so many opportunities. And I say that to the audience because we would love to have more talent down here. And there are some really big problems that we're working on. Something else that has been evolving over the last several years and in conjunction with the evolution of Nubank is the Fintech ecosystem. And again, because there are really big opportunities, really big problems that we can crack in a region where half of the population still is unbanked, right? And again, we have all these big banks that maybe just don't have the incentive or the infrastructure right now to bank those people, something that you guys are doing really well. And in the region currently, we have almost 1,200 fintechs that are active. The growth over the last couple of years has been in the double digits consistently. Fintech is the segment that receives the most VC investment in the region. Do you think that we're getting to a place where it's saturated? Do you still see opportunity? What are the segments that you think really need more people coming into fintech, and maybe where are the segments a bit crowded?
Yeah. So net, I think there's still a lot of opportunity. We're going back to the biggest by when you look at Latin American GDP and you look at the segment, different type of segment, financial services is the largest. So we're talking about something like an $700 billion of market cap of financial services in Latin America. This is over 20% of the world's GDP. So it's a gigantic space, financial services. So there's a lot of space. Now, there are some of the obvious parts of fintech I think are now saturated, especially in countries like Brazil, which will be the largest, or Mexico. I don't think, for example, there's space anymore for the next wallet. The wallet story, the payment story is played out. It's going to be too hard to really scale. In Brazil, especially, you see 50, 60, 70 different wallets, everybody investing in customer acquisition. There's very little differentiation. There's no real business model. I think that story is going to be play out, and I just don't see that really happening anymore. Although a lot of people are very much focused on that. But there are definitely areas where surprisingly few people have really looked into. So first, I would say the entire space, banking the small business, the micro entrepreneur. there's been some activity there. I still think it's a very large segment of the economy. In Latin America, in Brazil, in Mexico, in Colombia, there's a big level of entrepreneurship. A lot of people work from home. They have their own businesses. That customer is very badly served by the big banks. So providing lending, providing accounts, providing payment solution for the small business, it's an interesting opportunity, although there's been less activity. There's a big opportunity around infrastructure. So some big trends around the region is for example, open banking, which will will remove a lot of the friction that exists today in some of these markets. I think providing infrastructure for companies that want to enter into financial services is still a really interesting opportunity that will be developed a lot. Everybody has a bit of a financial services angle. If you're a software company, you want to provide financial services. If you are a retailer, you want to provide financial services. I don't believe they can really be the best at building financial services. If you're focused on retail, I don't think you necessarily will be the best position to provide financial services as well, but there will be infrastructure that will enable you to cross-sell and partner with firms that focus on financial services. And then there are consumer areas that are very surprisingly unexplored. So mortgages, for example, 1% of Brazilian GDP is mortgages versus US is 110% of GDP. Very, very low. There's historical reasons why in countries like Brazil, you don't have that. Brazil had hyperinflation. Getting long-term funding was really, really hard. That all changes in the low interest rate environment that we're in. So that could enable the next generation mortgage creation that has huge value for society, allowing people to buy their homes. Student financing, very odd, very little activity around student lending. Education is a huge opportunity in Latin America. Not many people really looking at that. And even some financing aspects around certain verticals, like financing for healthcare or lending for healthcare. It sometimes ends up being more like insurance, health insurance. So there's definitely opportunities around financial services and fintech, but still a lot of the focus continues to be in areas that like wallets and banking for consumer and doing the next neobank for the consumer, which I think I just don't see being there really an opportunity anymore.
Yeah, it's super interesting. If you put any credence in sort of funding rounds being attesting to sort of the trends or where the needs are, you see companies like Oyster Financial, right? So they're banking for SMEs. You see companies like, you mentioned infrastructure. So in Africa, Mono is a company that's going to be the plaid for Africa. And I think there's a lot of discussion around what's going to be the plaid for Latin America. And for me, it's exciting to see, again, the evolution of the ecosystem for fintech going into more niche products and penetrating a little bit more the needs of the emerging middle class. So that's super exciting. What about the evolution of the tech ecosystem? So I read an interview that you did where a part of your decision to sort of shut down Sequoia in Latin America was also the lack of engineering talent and the lack of sort of pipeline for talent. And you mentioned that, you know, that's something that you've looked at from the very beginning with Nubank in terms of like your plan for the business, but also and fundraising, but also your plan for talent. So talk to us a little bit about how you've seen the ecosystem change, whether it's sort of the tech ecosystem in general or at a talent level.
Yeah, I think unfortunately that the raw material of the tech ecosystem, which is not capital, it is engineers, hasn't changed as much, and that's still something that really needs to change. The metric, I remember very clearly the meeting where I was with the partners at Sequoia in Sao Paulo, and I remember their face when we heard one metric that changed their entire view about Latin America was the number of computer science engineers graduating from the University of Sao Paulo every year, which was 40. That was crazy. And you go and see how many computer science engineers graduated from the same university 20 years ago, and it was 40. It was the same. I recently saw these metrics for Colombia. Colombia is graduating less computer science engineering today than 15 years ago. And you're graduating 2x more accountants and lawyers than 15 years ago.
Mhm.
So that is very strange, because I think there's definitely increases in entrepreneurship, and a lot of people are now, if 5-10 years ago they were thinking about, after college I'll go do consulting, now they're going to a startup or they're starting a company. That you definitely see changes there. But something's happening with the 17, 18-year-old Brazilian or Mexican that is still deciding to go and do accounting or law, and it's not seeing what's happening in the world in terms of technology. The incredible revolution that technology companies are doing, and the way they're changing all the industries in all sectors. So something's missing there, and yeah, I don't think ultimately you get into a bottleneck very, very quickly, because that's the hardest part. If you're a tech company, and now almost all startups are tech companies, you need engineers, and so you need to go and then start hiring from each other very actively. And now with the world going remote, fully remote, that means that companies in the US and Europe are hiring engineers in Brazil and Mexico at a lower price. So that makes it even harder for local startups to hire their engineers. They cannot pay for the same salaries that some of these companies are. So the demand for that talent has increased a lot during COVID, of the local engineering talent from both more startups and more global companies. And the supply is not really changing. There are a few startups focusing on startups and NGOs now. They're focusing on training engineers, and that's great. That should help, but I don't think nobody has really cracked the code of how do you train 100,000 engineers in a year. When you look at a lot of the numbers of these companies, you're talking about 50 engineers or 60 engineers or 100 engineers. That is great, and that is a good move in the right direction, but that will not move the needle fundamentally for the ecosystem. And so there's still an opportunity again for somebody to figure out how do you train at scale computer engineers in the region, and make them very, very quickly productive members of society that are adding a lot of value to a lot of this to this ecosystem.
Absolutely. And just to sort of give a bit of depth there, I saw recently that, as you mentioned, in the past 20 years, if Brazil, Mexico, and Colombia combined graduated 6 million STEM graduates, 6 million in 20 years, compared to China, 68 million in China, and 35 million in India. So there's a huge opportunity. And yeah, I hope that there are more people working on this problem as well, to get more people into STEM, and also more women into STEM. I think one of the companies that I really like, actually from Peru, where you're dialing in from, is Laboratoria, and they train women to have careers in engineering. So yeah. So one topic that's always interesting to me and near and dear to my heart is diversity and inclusion. So it's super interesting to me that in Latin America, Nubank is one of the few startups that has a co-founder, a female co-founder, and you're one of the few unicorns. We have 17 unicorns now, up from 3 years ago when the region had 0. And it's interesting that you have a diverse founding team. So wonder if you can tell us a little bit about that, sort of how it came to be, how it works for you, and also thinking about, we were talking about this before we kicked off, Latin America actually has 16% of founding teams receiving investment have a female co-founder, which is actually double what it is in the US and Europe. So US has 9% and Europe has 8% of, again, startups that receive VC investment with a female co-founder. So any thoughts on how we arrived to this statistic and what we can be doing to continue this trend and have Latin America always be in the forefront of having more female co-founders, having more women and actually just diverse people in the startup ecosystem?
Yeah, sure. So, but when we started in putting together in 2015 the team, I remember very well a conversation I had with one of the partners at Sequoia, where I told him the idea, and he, in a very candid way, very directly said, it's very interesting, but your background, David, is very inadequate to build a company. Straight up. I
Ouch.
remember that, yeah, I remember that I was at some point, I was very proud of, the investment banking and the private equity background and all that stuff. And by the time I went to Silicon Valley, somebody like Sequoia, they actually thought it was a net negative. The banking and the private equity was a net negative. They don't like that type of background much in Silicon Valley. Where they get excited is about somebody that has actual operating background, that have done sales or marketing or have actually built something. Because if you think about it, that really is what the type of background that matters when you're a venture capitalist. Like you've been in the trenches, you know how hard it is, and you can add value to entrepreneur like that. And me as a venture capital investor, I felt like that. People would take my meetings because I had a Sequoia business card, but I also felt completely inadequate about telling the entrepreneur or the founder how to do their business. I just didn't have the experience. And that was one more reason why I felt that I really wanted to build something versus be an investor. But when that partner told me you're inadequate, and he explained, he said, well, there's a lot of different skill sets that you need, and you don't have them. You're not Brazilian. You don't even speak the language well. You don't know about banking in Brazil. You don't know the regulation. You want to build a technology company, but you're not a technologist. And it pinched a little bit, it hurt, but it was a great advice because it allowed me to take a step back and say, okay, let's build a founding team that fills my gaps, right? And I was very strategic in defining what those key gaps initially were and go find somebody that filled those gaps. So initially, two big gaps. First one was a Brazilian that understood banking from within and that understood regulation. And I met 50 people like that. And I was very lucky to find Christina, my co-founder, had exactly that background. But I also had a bit of the rebel mentality that knew the enemy from within and was ready to come to the other side, come to the to our end. And then the other big gap that I had was technology. It was clear I wanted to build a technology company. And so I went and met a bunch of CTOs, people that had background. That's when I met Ed, my other co-founder, and it was also clicked immediately, and we joined. And so it was with that three group, I was able to already decrease a lot of the execution risk because I was bringing people that were filling my gaps. And that's when something around the importance of diversity clicked. That's why diversity is important, right? It's you as a team, you're bringing people that can play in all positions. And it's a huge mistake when you look at a lot of these teams, sometimes even entrepreneurs that go and hire and they work with their best friends or with their best buddies. Generally, you're friends with people that are very much like you. And you end up with these teams that are very much homogeneous. And so it's a football team that everybody plays the same position. Everybody is a goalie, right? And so based on that realization, that's how we started building the entire team. And we even put diversity as one of our key core 5 values of diversity is important because especially when you're building a business that is trying to go against the status quo and reinvent an industry, you want to attack a concept and an argument from all potential different angles. When I was the foreigner in Brazil, thinking about the banking, it was a bliss, but it was a curse being a foreigner. It was a bliss because I don't think this idea would have been developed by a Brazilian. Going back to initially, the conventional wisdom was so entrenched that all Brazilians could not imagine that you could compete with these big banks. What I heard is this is the way things have always been, and this is the things that always will be. You have to wait an hour in a banking branch. That's the way things are. So being a foreigner, a dumb, ignorant foreigner that thought that you could do was great, but then to execute, you needed the complementarity. And so that's, I think, fundamentally and philosophically why we've embraced diversity since the very beginning, because ultimately the best way to challenge conventional wisdom is to bring a lot of diverse people and just using all those ideas people that have different interests, people that have different views, all type of diversity, cognitive diversity, interest diversity. We even structure ourselves organizationally, not by functions, but by squads, where we have our collections team has customer service people that are sitting next to data science people, sitting next to the engineers, sitting next to the product managers, sitting next to the analysts. So you have somebody study communication, sitting next to somebody study philosophy, sitting next to somebody, and we love that. And when we go hire people, that's what we're looking. We're looking more for commonality of purpose, of culture, versus did you do this career and you have this brand in your resume. And I think that's the opposite of what banks do, where they go and they're 100% male, and you look at these meeting rooms, and all males, they all have the same suit, they all have the same tie, they cannot have a beard, you cannot even have a tattoo. If you show a tattoo, they'll fire you if you show a tattoo. And it's amazing, it's very symbolically interesting, because those big organizations, what really telling you is, we don't want your individuality. We don't care. We want you to conform to this army of people that look exactly like you. And so to really have a chance at innovation and creativity, you have to break that. You have to bring and have this chaotic environment where ultimately you bring an idea and you attack that idea from all angles, and the best idea ends up winning. Now, Absolutely. To your second part of the question on why Latin America has more diversity in the founding team than other geos, I don't really have an idea. It's a great observation. I gotta think about that. And I think partly might be that there's a bit of the glass ceiling effect, where once you break that glass ceiling and you see a co-founder, like my co-founder, Christina, perhaps, she's a co-founder of a successful technology company in Latin America. She's in the front row, the front page of a magazine, and the graduate from engineer, a female, sees that, they say, this is doable. I can do that. I can start a business the same as her. You need success cases. You need examples. And maybe this is this like flywheel, the reinforcing flywheel that we're going to start seeing more and more on females, co-founders of startup. They realize that these are really valuable and feasible path.
Absolutely. And yeah, I hope the trend continues, where Latin America is always leading the way in terms of female co-founders, females in STEM careers, females in finance, technology, and everything. So, and yeah, it's the best way to sort of crack a problem like a Rubik's Cube, right? To have people with different skill sets and different ways of thinking to be able to do that. I want to be respectful of time, your time, and also the rest of the event. So just as we close out this session, any parting thoughts, any words of wisdom to the audience that you would like to share?
And go start a business. Go create something. It's a very exciting journey. It's a journey full of learning. It might work out. It might not work out. At the end of the day, it doesn't really matter. I think what's exciting is the journey. The journey of starting something, of getting a team, of putting everybody around the table, of going for an idea and fighting. The good fight is the sort of the man and female in the arena. That's really, really exciting. You're going to be challenged in different ways that you didn't know. You're gonna learn a lot. Every day is a different lesson. It will hurt. You will fail. But it's a really, really rewarding experience. And so I think there is a phase for planning, and you definitely have to plan and think strategically and come up with that idea. But at some point, you just got to go and do it. You're never going to have all the answers. If you're waiting for all the answers before you start starting, you're never going to do anything. So I really kind of encourage people to go take those risks. And the best way to start is go walk the cities of any Latin American cities. Really go walk any of these cities for 24 hours, and you'll find the problems. You find the big problems that you want to tackle.
Awesome. Well, thank you so much, David, for sharing your journey with us. And thank you for